Hi, welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended March 25th, 2015, long-term mutual funds saw very little in the way of net inflows this week, while ETFs were awash in cash. Let's take a look at our macro groups and see where the activity was. As you can see here, equity mutual funds saw outflows of about $1.6 billion, while taxable bond funds and municipal bond funds saw inflows of about $1.6 billion, effectively netting at zero for long-term funds. Money market funds were the outlier with $13 billion in inflows. Well, between all the bad news about a plane crash in Europe, strange things going on with between central bankers, and just seemingly dour information about Wall Street, it was no surprise that the Dow Jones Industrial Average saw triple-digit swings in 4 out of the 5 trading days this week. That kind of volatility may have spooked the retail investor who has lately been a little unsure about where to park their money in mutual funds. As we saw earlier, about $1.6 billion exited equity mutual funds. Let's take a look at this week's activity here. Again, volatility seems to be back with those triple-digit swings. It's prompting investors to reconsider how much they really like equities right now. Domestic equities are really on the edge right now. They saw about $2.5 billion in outflows compared to non-domestic equity funds, which saw inflows about $877 million. The overall leader this week when it came to individual classifications was International Multi-Cap Value, followed by International Small and Mid-Cap Value. Rather interesting that those two have taken the lead here. Part of that may be product specific, but another part may be individuals wanting to get a little more cushion in their portfolio by investing in value names and maybe sensing that the ride in the U.S. has gone a little too far for their comfort. On the outside of things and looking in were large cap core funds. They had about $1.4 billion in outflows, so investors continue to shed large cap core in an effort to further diversify their portfolios. Well, now let's take a look and see how equity ETFs did. Again, they had about $7.3 billion in inflows this week, a very good week for them. Core and hedge products definitely led the inflows parade. SPY, of course, at the very top with $2.3 billion in inflows. The Russell 2000, the IWM ETF, was not far behind at $841 billion, given its significantly smaller. And then the MSCI EFA also had decent inflows, about $755 million. On the losing end of things, gold, consumer staples, financial services, investors soured on those. They all had outflows of between $250 and $500 million this week. Next group to take a look at is taxable bond funds. Again, they had inflows this week of about $1.1 billion. This came on flat performance for the week. I think people were more focused on the equity markets instead. Core plus bond funds took in $1.2 billion. That was a pretty good week for them. Not far behind, global income funds, kind of an interesting choice there with about $939 million in net inflows, but on the losing end, loan participation funds, no surprise. They also had outflows this week, about $237 million. High yield funds also saw outflows, $190 million. High yield flows have been kind of sporadic lately as investors are really unsure about what the high yield market has in store for them. Well, let's turn our attention now to bond ETFs. They were also recipients of good cash flows this week, taking in about $1.5 billion. Corporates definitely had the leadership this week, as you can see in the top here, with junk and aggregate products leading the way in terms of inflows. The volatility plays absolutely sold off. As you look at the bottom here, most of the short VIX products that we track, which are on the fixed income side, saw outflows this week. Perhaps that's investors sensing that maybe the worst has passed. These are, after all, the most in-tune investors in the ETF market making these decisions. The next group to take a look at is municipal debt funds. They had a pretty good week, $500 million. This is the second week that they've had inflows on good performance. High yield funds, high yield municipal funds to be exact, took in $306 million this week. That's their best week of inflows since mid-October. So maybe investors are getting a little more comfortable with high-yield municipal debt funds. They've certainly had a good year so far, but this is one of the best weeks in quite a long time, several months in fact. So I think investors are getting more comfortable with high yield and municipal debt funds. These short municipal debt funds, not the ones that go short against the market, but are short duration, they actually had outflows this week, about $102 million. My guess is that some investors in that area who had been conservative were more willing to reach out for yield this week in the high yield muni space. Finally, the last group to take a look at is money market funds with about $13 billion in inflow this week. It was a good net between retail investors pulling $1.7 billion from their accounts and institutions adding $14.7 in theirs. Flows, as you can see here, have gone back and forth over a number of weeks. There's really no pattern to be discerned here as far as why investors are making these decisions, but we'll track it nonetheless. Well, that'll do it for this week's Flows Report. Join us online at www.lipperusfundflows.com or see us here for next week's evaluation of flows. And in fact, we may be delayed given the Good Friday holiday, so probably look for us next Monday. Thanks for watching.